Well, good morning, everyone. Welcome to our Thursday morning trading room, and very likely the last trading session of the season of the year. Tomorrow, of course, Friday, just before the Christmas holiday break, the markets will be very quiet. I'm going to go out on a limb and say that right now, as they usually are. Off to a little bit of a quiet start this morning as well. I was wondering what we were going to see for Thursday before Christmas. But yesterday had a pretty good start to the day, although things kind of hit the skids afterwards. We had a little bit of a rebound after a quick move lower, a little bit of a sideways session, a slight bounce up going into the close, and that's where they stayed. Very quiet through the Asian and the European sessions, which again, given the time of year, not that surprising. A little bit of a rally up there. Wasn't quite looking for that. I thought we were going to see prices maybe continue a little bit lower. Well, the buyers putting in a decent rally here, or trying to. It's still early though. We're only a few minutes into the day. Here on the Raptor, you can see we had a very nice number one signal. This came early pre-market around mid-session for the London session. Clouds crossing, nice little pullback, kind of at the top end of the trading range. This one wasn't exactly inside the trading range. It gave us that breakout and retest that we like to see. Actually gave us a couple of retests. Another one here, another one here. And now we've put in a little bit of a rally. The Hawk producing a first micro macro cross out of the open. And the Falcon, a very early trend change signal, the proper trend change signal producing right here. The next signal over. And the Eagle also producing a with trend signal right on the opening buzzer. So overall, a slightly bullish flavor to start the day. But I can almost tell from how quiet everything is already, probably not going to wander too far today. Well, we're waiting for a setup. Let's take a look at the daily chart. And I pointed this out last few days, how we have this little bit of a sideways trading range, and we're responding to the top end of the range. It's entirely possible to expect the market to slip down here. That would bring us back to around 6,400. If the market is going to enter a sideways trading range, which it very likely will, it could develop into a range like this, or maybe even a bigger range, take us all the way back here. So you can see there's some serious downside potential. And a lot of traders have been looking at this for quite some time. Speculating that perhaps a correction is due. All right, so you're probably wondering, Eric, what are you looking at? Okay, so here's yesterday's session off of the open. And what I was going to do is I was going to compare volume. So you can see what the volume is here, and here is this morning's opening volume. Looks like about half of what we saw yesterday. And again, that just kind of goes in sync with a market that is pre-Christmas. Keith is asking, Eric, what volume indicator do you have on your daily chart? 1 second, let me bring that back. It is just a plain Jane volume histogram, Keith. Just daily volume. Nothing fancy. Old school. It's, volume, it is a very useful indicator. Unfortunately, it's difficult to interpret. It's not like a nice moving average that crosses over, or an oscillator like a stochastic or RSI or MACD. Volume is difficult to read, as you've no doubt noticed. The nice thing about volume is that, well, it tends to be leading, first of all, and it gives you a pretty good indication when the market is running out of steam. So usually what you're looking for when you're trading volume or following volume is you're looking for tiny bars with abnormally large volume. See this tiny little bar here? It had more volume on it than this bar right here, and yet it didn't go anywhere. So whenever things like that happen, you need to sit up and take notice, because it's probably leading to a reversal of some sort. See, it did it again down here. Tiny little bar, huge volume. Hey, way to go, Steve. Steve says, yay, finally made a bit of change this month. Good for you. Hey, way to go, Mark. Mark says, took a couple early trades here. He said, took the first hawk trade, so that would have been the first micro-macro cross right here. And he said, took the early falcon trade. And that would have been this one right here. That's a bit of a squeaker. Oh, although sometimes I know, Mark, you like to do the pre-market. You may have done that one there. They didn't, regardless, they didn't offer up a whole lot more than their profit objectives. And now we're kind of sideways again. Yeah, Mark says, I'm waiting for the next opportunity. I'm not sure there's going to be one. That's just me talking. The market could make a monster move now that I've come out and said it's not going to make a monster move. A nice little test of the extreme here, came down to the hard edge, which is our target, off that number 2 signal. The number 3 signal, did it engage? I don't see an arrow, so I'm going to say no, it didn't quite engage yet. But you do have an opportunity at a second push entry on that one. Let's take a look here. Rick is asking for the Russell. And, oh dear, I didn't put it into my data assortment. One moment, please. coming. Okay, so this now, the Russell, RTY, that's the new Russell on the CME. Yeah, good call, Rick. It looks like we're looking at a hard edge bounce, a possible hard edge bounce. And here too, it hasn't engaged. It'll be interesting to see how this plays out relative to the NASDAQ, because the NASDAQ also had one here. We'll see whether or not the NASDAQ, if it's actually leading the Russell. That would be interesting. It's always nice when you have a little bit of a crystal ball market, one that reacts early. If you're trading the grain markets, for instance, especially end of day, if you follow oats and wheat, they tend to move a little bit before corn. Soybeans sometimes are a little bit out there. They're a little bit on their own. No, it's a setup, Rick. For sure it is. It's a hard edge bounce. It's a number 3 signal in the making. It didn't touch the hard edge exactly, which is probably why it didn't print a number 3 signal, but it is still a number 3 signal. You need to remember these signal prompts are all mathematically programmed. So if it doesn't meet all the programming requirements exactly, well, it's not going to print. But very often visually you can look at it and you can say, yeah, that's close enough to a hard edge bounce. If it rallies, I'll take a look at buying it. And that's where you want to be. You want to be flexible enough with your tools that you can recognize the opportunity with or without the signal prompt. We're liking the 6,500 area. Haven't moved too far off that line. And that's going to be the primary resistance line. Kind of settled right here. Technically it's 64.99 half. You may as well call it 6,500. Excuse me. Yeah, Mark says, I dropped my crystal ball a few years ago, doggone it. But ask for a new one from Santa this year. We'll see. Not holding my breath though. Back in the day, I used to have a magic 8-ball when we would have these trading rooms, and just for kicks, we'd see what the magic 8-ball would tell us to do. All right, a little bit of a bearish push. And a couple trend change signals now. First micro macro cross lower on the hawk. Early trend change signal right here on the falcon. That's a nice little move. The eagle through the hard edge, so we normally anticipate some sort of reaction there. The raptor, the clouds are starting to cross. This would be what I would refer to as an early cloud crossover. As the cloud's not fully crossed yet, would like to see a little bit of a pullback though before getting on board. Quick little move now to the median line. Now I've noticed the Russell hasn't moved yet, so we'll see whether the Russell falls off in response to the decline here in the NASDAQ. Russell's asking about a number 2 setup in the Russell. This is now your Russell chart again. We're printing a green warning dot, so that's actually bullish. So there we go. That now confirming a number 2 setup. Now it's not printing the prompt, and again, that would only be because the programming. Let me see what I have my soft edge parameters set at. Okay, so I have my soft edge parameters. That's signal parameters SE. The extreme reset set at 1.25. The higher you make this value, the more number 2 signals you will print. So the higher this value, the more flexible the interpretation. The lower the value, the more stringent the interpretation. And with the minimum bar retest, it's the opposite. The lower this value, the more stringent. The higher the value, the more flexible. So yeah, this is a number 2 signal now. When the number 2 signal prints this close to the hard edge, you're always hoping that it pushes a little bit past because, well, the hard edge tends to be the target for the trade. But you can see here was one to the upside. Very good follow through higher. Regardless, today being the kind of day it is, you should probably use a second push entry. So the second push entry just means we allow the signal to engage. We let it react. And then you place your entry. So we would be looking for some renewed momentum to bring us in on this trade. And so far, the Russell trader's not falling for it. The NASDAQ pulling back into the cloud. of here now, we will produce a number one signal. And that will be our cloud crossover. Excuse me. Rick is asking, I've been doing something and maybe making a personal rule. It is never make a number two trade, just let it pass over. Try the number one or the number three. Is the number three a strong, if the number three is a strong wave? Generally speaking, you're going to do better staying with the trend. The challenge becomes trying to identify the trend. So here you have a day like today. Are we in an uptrend or a downtrend? Well, we had an uptrend here, and I would say now we are in a downtrend. If we get more than two of these on a chart, then we have no trend. Now notice I'm not, being like this. I'm not capturing every single little swing and saying, oh, well, we've got four different things on here. We can't possibly have a trend. No, you don't want to get quite that precise. If it looks like a trend, well, then you have a trend. Right now, to me, it looks like we have a little bit of a downtrend. So if you have a trend, excuse me, you tend to do better staying with trend. Counter trend trades, when they work, they're great because they tend to be fast and they can have some pretty good profit potential to them, as you can see. The problem is you're trading probabilities. You're trading the probability of a reliable trade for a smaller risk trade. So that's the trade-off when you do a counter trend move. But when you have a market that seems to be trending, when you're taking your with trend signals, I think you're going to find that most times those are going to work out better for you. Let's take a look at yesterday's trading, where we had an obvious downtrend, right? No question that market's in a downtrend, and then we get a counter trend signal. Is this a valid signal? Yes. But where do I need to place my stop in order to make that signal work? Right? I enter there. Is it going to work if I leave my stop down there? Nope. Okay, so where did I need to leave my stop? Now, it's still doable. So you just need to know in a very strong downtrending market, I have to leave about a $400 stop on a counter trend trade in order to make that work. Now, of course, when you're in counter trend trades, you can never take the with trend trades. So here now is a hard edge bounce that I would have to wait for, and I could easily take that trade. Come on, get down there to the profit target. There we go. If I didn't take that one, I had another one, another one, and another one, all three of which eventually hit their profit objectives. So I could have had multiple with trend entries. And here's a couple more. Then when the market finally makes it clear that it's reversing, well, then I can start taking with trend going the other direction. Probably the trickiest part of trading, like I said, is determining the trend or the lack thereof. The market will only have one of two conditions. It will either be trending or non-trending. You need to keep that in mind as well. You need to keep in mind that when you're looking left in your chart, sometimes you need to recognize that, ooh, maybe the trend is gone. Maybe we're starting to move sideways. I find an easy way to do that is not just to highlight the lows, say in the downtrend, but also to connect the dots with the highs. And you'll start to see when a trend is starting to shift. Of course, trading in hindsight is always easier and sometimes a little bit more fun, but it's not exactly the objective. Yeah, Rick says I'm trying to remove the low probability, and that's fantastic, but you need to keep in mind, like I said, the trend, whether you're trending. First question should be, are we trending? Second question, if yes, up or down? And if we're not trending, then is the trading range large enough that I can trade? Hey, way to go, Mark. Mark says I've taken 3 out of 5 trades out of my 5 trade quota. And I'm assuming you went 3 for 3 on those, Mark. Says I'm done for the day. I'm not sure I'm even going to get a trade off here this morning, you know that? Yeah, so the Russell did just produce a number 3 signal, the hard edge bounce. So you come into the hard edge, there's the signal. This is not a bad signal because you have enough room getting back to the highs that you should be able to do something with the trade if it chooses to reverse on you. The problem with these number 3 signals is that they can end up being a test of the extreme, a retest of the high, and a failure. but there should be enough room in there that we should see the market give it a decent retest. And if it's going to fail, well, hopefully there's enough in there that you can adjust it somewhat. Yeah, Mark says 3 for 3, not a bad day, but this is where I get nervous. Yeah, I hear you. Okay, so here's now the with trend crossover signal. Also got the hard edge bounce and the eagle. Falcons in between trades. The hawk producing a red bar buy, which you could short. And here now a number 1 signal. So the clouds crossed over, got the pullback, coming back with the new trend, and we have a chance at a second push entry. So the signal is engaged. I can look for some renewed momentum to bring me into this trade. And this is really fairly ambitious on my part. Oh, they didn't slip me. Wow. I thought for sure I was going to get slipped a tick. All right, we'll see what they do here. If anything, all right, hold on here. Rick's got a question about his Russell. Okay. So Rick asks, now I get a number 2 short. Sorry, but this is confusing to me. All right. What is your trend condition here, Rick? And I'm not saying this to pick on you. I'm saying this to try to help you. How would you identify this trend? Yeah, I know you guys never need to worry if I pick on you, because honestly, nobody knows you. You may, unless you have a friend in the room. Yeah, okay, so Rick says sideways at best. I would agree with that. I would say, it looks like we've got an uptrend here. We have a downtrend here. We have an uptrend here. And we have the makings of a downtrend here. Not quite a downtrend yet, but, kind of getting there, maybe, kind of, sort of. So we've got three different trends on this chart. So I would conclude that, yes, the market is probably sideways. Sideways markets tend not to trend very well. I know you're thinking, yeah, okay, great, Eric. That's a real news flash. Thanks a lot for that one. But people tend to forget this. So when you're producing signals, you should not be surprised when the market labors to follow through on the signal. Now, does that mean this number 3 signal is not valid? No, of course it's valid. But because the market is sideways, it's not going to shoot straight up to its target, right? Compare today's session with yesterday's session. No question, the market is in a strong downtrend. So when you get your hard edge bounce signals, you're going to get some follow through as well, right? Today is entirely different from what yesterday is. So when you recognize the market is sideways, there's one of two things you can do. Well, there's more than two things you can do, but here, generally speaking. Okay, you're going to recognize the market is in a sideways trading range. Thing number one you can do is you can wait for the market to get outside this trading range, either higher or lower. Once it gets outside this trading range, it will retest the trading range. And if it's going to stay out, it will produce another signal. That's the signal you want to focus on. That's going to be your higher probability signal. If the market does not honor the breakout, it will come back into the trading range and it will continue moving back and forth. Likewise, same thing to the downside. You're going to get the breakout, you will get a retest, you will get a signal. These retests in a reasonably fast market or reasonable amount of volatility in the marketplace will usually develop, 5-10 minutes kind of idea. In a slower market, they could take an hour or more to develop, but you will get the retest. And again, if the market's going to stay out, you will get the follow-up signal. Otherwise, prices will just drift back in and it will trap all those early breakout traders out of their trades. So knowing that the market is potentially in a sideways trading range and you get this number 3 signal and you would like to take it, where should your stop go? Well, it's not going to go right there. It's not going to go below the low of the signal bar. Why? Well, because the market is sideways. Sideways markets mean that there's a very real possibility we're going to retest the lows down here. So that's where your stop should actually go, is way down below those lows. Now that's your initial stop, but it should still be an amount that you can afford to lose if you've figured out the trade wrong. And what I mean by initial stop is on the next rally, let's say the market rallies up here a little bit, I can take my stop now from down here, and where it was initially $500, I can probably bring it now below the low of the day and have about $100, $125 at risk. All right, so you don't need to freak out that the initial risk is that big, but that's what you need to start with in order to try to make this trade work. The number 2 signal has developed because we have seen a retest of the high, and now the signal parameters have been met for a possible sell. A counter trend signal must always have a trend preceding it. Okay, well, this resembles a trend, although it is still kind of in a sideways market. And the target for your counter trend signal is the hard edge. Well, it looks like that worked out. It looks like they came down, didn't tag the hard edge exactly, but they got pretty darn close. All right, so that number 2 signal, counter trend signal, would have worked. If you're looking for more out of the number 2 signal, well, where does your stop need to be? It needs to be above the high of the day. So you can see now the trade-off is fairly evident between the with trend trade and the counter trend trade. The counter trend trade saying, hey, you can put this trade on for only $200 versus the with trend trade that needed nearly 500 to start. But the trade-off is the chance that the market's going to come down here to your profit objective is probably 50-50 at best. So a trade is always a balancing act. There's always things to consider. Where am I going to place my entry? Where am I going to place my stop loss? Almost any signal will become profitable given a large enough stop loss. If the stop loss is too big for you, the trade manager is going to say, oh, sorry, Eric, you can't afford that trade, and gives you the warning up there saying, nope, you don't have enough money to do that kind of trade. All right, well, then I guess I'm going to have to wait until I get a signal that I can afford. Don't make the mistake, however, of being in a hurry to lose your money and say, oh, well, I'll just throw my stop down there. Because what will happen is the market will bring you in and then give you a nice little pat on the back as it takes your money from you, and then may or may not eventually go up to your profit objective. The Russell tends to be a little bit slower as well. A lot of people think it's a purer market, only because more professionals like to follow it. I don't know if that means you're going to make any more money. Scott here makes an interesting comment. He says, to Rick, we used to trade the Russell all last year. Very glad I switched to the NASDAQ when I started using DTS. I watched the Russell and the NASDAQ the first few weeks with the Raptor, but quickly saw the NASDAQ moved better. That is the one nice thing about the NASDAQ is there's usually a little bit more volatility. So even when the markets are quiet like this, there tends to be a little bit more follow through. And John confirms what Scott's saying. Says, me too on the Russell, same as Scott. The NASDAQ, I think, is the most overlooked market in the group of stock indices. $5 a tick, it's a deal, and it's always moving. Rick says, I kind of cut my teeth on the Russell, and it's in my CME group. Not married to it. Thanks for the NASDAQ input. We all have our favorites as well. You know, some people like to trade gold. Crude used to be a huge market, but crude very slow. Yeah. Um, Mark says the volume's really dried up. It's you can kind of tell again, very sideways trading. Right? Lots of sideways action, very little follow through. John says I cut my wrists on the Russell. I think it's worthwhile to focus on a single market as well. Um, Traders have the impression that they need to follow three or four or even more markets simultaneously. And again, the aim is to make more money, but it's usually counterproductive. I'm following three charts here, and that's mostly for the benefit of the room because occasionally people ask me about crude or gold or the E-mini or whatever. But a lot of times when I'm glancing over at the other chart, I will miss a setup on my main charts here on the NASDAQ. Well, still got the sideways drift going on. I think we're just going to see more of the same here, and I'm tempted to close down the trading room a little bit early here. We'll give it a few more minutes. Elmer's asking, Eric, since nothing is happening, a question of track. Can one create more sim accounts with different amounts? Yes, absolutely. Oh, different amounts. Different amounts, I'm not sure. I know you can create as many sim accounts as you want. If you go to your tools and then your options, you'll select your simulator and you can just type in an account name and that will give you different sim accounts. So you can sim 1, sim 2, sim 3, or whatever. But as far as posting different values, that one I'm not so sure about because I think it just defaults to that one value. The folks at NinjaTrader, if you shoot them an email, they will be able to help you out on that. Mark writes, I only trade the NASDAQ and occasionally the news on oil, but I found you really get to know how a market lives and breathes when you stick to one and focus on it. Gives you the insight to anticipate moves and know when to get in and out of at the right times. Just my opinion and experience, and I know this is a debated topic. I would tend to agree. Pick a market, stay with it. You know, if you're looking for my 2 cents, I honestly think the NASDAQ is pretty tough to beat. Some people like the YM. It tends to be a little less volatile, so the moves are going to be maybe a little bit slower. The Russell, like I said, a lot of folks consider that to be one of the purer markets. The E-mini, always a crowd favorite. Gold, a very good 24-hour market. Crude oil, unfortunately, not the market it used to be. Scott says, saw some interesting data on my trades over the last 2 months looking at the NinjaTrader Control Center account performance periods and the half hour of the day. I suck at the 6:30 to 7 window, so that would be the opening range, but do much better after that time. Thought it may help others. Yeah, well, opening range is tough. It's I'm amazed, you know, the guys like Mark and Keith that like to get in there early, that you guys haven't got your hands slapped yet. And you know, good on you that that you can take those early trades with confidence. I don't mind waiting, but hey, that's trading, right? It's a very personal thing. Yeah, I see. And then Julian says, laugh out loud, I do best at 6:30. So there's Julian killing it off of the open. But like I said, trading very personal endeavor, and you need to find what's working for you. Because, hey, at the end of the day, it's your money, right? I can show you what I think, but it's your money. All right, folks, I think we're going to button up shop here, call it an early week. There will be no trading room tomorrow. If you think today is slow, just take a look at your charts tomorrow. No trading room the week between Christmas, New Year, or the first week of the year. The markets will be fairly active between Christmas, New Year, but they're going to be thin. So if you're going to try to trade over the holidays, keep your stops handy. You might be needing them. And then the first week of the new year, after everybody sobers up a little bit, the markets will be a little bit more reasonable, but we're not going to get back at the trading room until, I think, January 6th is the first Monday after the new year. And we'll close here with Mark's comment. Mark says, I'm sure my luck will run out eventually, as the markets do have a tendency to change over time, but as long as it keeps working, I'll keep doing it. And that's true too. A nice observation. The markets do change, and you do need to adjust sometimes how you handle yourself in the markets. He also writes, but to Scott's comment, he makes a good observation, and that's how you learn what works for you. And that is so true. And that's where journal keeping really shines. And just, stepping back from the charts a little bit and saying, yeah, this works. I have confidence in this. This is what I'm going to do. All right. Merry Christmas and Happy New Year to everyone in the room. Thank you for your good wishes. And right back at you. Hope you guys and girls have a wonderful holiday season. And I'll see you next year. We'll talk to you then. Bye for now.